In our earlier video where we talked about long-term investing and short-term trading, we actually recommended against using options. The deck is stacked against you in trading options yourself. I recommend to really be a successful investor or trader for a long time before you start buying or selling options yourself. I think it's important to set up how you can understand what's going on in the options markets without really needing to trade options yourself. So I think the first thing that's very important to understand about the options markets is that the options markets have a lot less lies in them than stocks. Options are a levered bet on the market, and they are also an expiring bet on the market. They are a better source of truth than where a stock is trading. And basically what's important about the fact that they're expiring is especially when an institution is, say, trading like an option that's less than 6 months, which is what goes into net option sentiment in Prospero. That is something that they really have to believe in that direction, because that option is losing a lot of time value. There are stocks where there are thousands of different options contract choices, different time frames, different strike prices, which is the price that you get to execute the option at. I'm sure you've been inundated with information on the options market and what to watch. I'm going to help you sort through a little bit some of the important things to look for, and I think the really best example comes between how we've invented our signals for especially tracking options versus what is out there in the market. I've subscribed to probably a lot of the same alerts products that you've subscribed to. Things like sweep orders, which is basically like when an institution buys a lot of a single contract. When an institution sweeps an options, it means they're buying it even as the ask price is going up. So they're actually paying more than they need to send you that message. And that is a very important concept for people to understand, that they're paying to send you that message. And institutions generally don't like paying more than they should. So they're only paying that premium to send you that alert because they know you're going to buy it when they get that. It doesn't mean to ignore option sweep orders, but it does mean that you need to really understand that you might be doing them a bigger favor than you're doing yourself. I started focusing on what I call institutional trade signatures. What institutions do not want you to know. The opposite of a sweep order. I will actually look at consistent buys across different expirations and different strike prices. What Prospero is doing is we're taking a sophisticated technical system and we're making it easier for retail investors to understand. We look for consistent buys, we look for it across a lot of different expirations, a lot of different strikes, and we look for little trickles. What institutions do when they buy a lot all at once and they move the price, they will do a lot of small trades in these purchases, or if they're really excited about it, they'll just do it across, but they'll layer the time spans. That's what we've built our algorithms to do that has worked so well, because we are looking for what the institutions don't want you to know, not what they want you to know. A funny story about how our net option sentiment was invented. I spent a lot of time actually tutoring retail investors. And one of the things that I struggled with many, many times was teaching a retail investor how to read an options chain. I actually said, what if I told you the options markets liked this or didn't like it? And the person said, well, it would be a lot easier if you could just tell me that. And I said, okay, I never want to teach anyone how to read an options chain again. And that's how net option sentiment was invented. That is why it is always my recommendation to find tools like our net option sentiment to make it easier for you to understand what's going on in the options markets without having to learn all of the minutia. But in the interim, it's really good to understand just the mechanisms of how these things work.